This year, the government's estimate for this year's GDP is maybe around 3 to 4%, but it's a good recovery if you look at it, from a COVID recovery point of view. But of course, if you look at the global economy, because of the high interest rates globally, is slowing down. Tight financial conditions means that the global economy will have to get through a slowdown period. And that means Hong Kong being a very open and small economy that's highly dependent on trade. Our external trade will be affected by that. And that's why you see our trade front coming down a bit, dragging down our growth. But if you look at the domestic consumption, things like retail sales, it's been coming up by about maybe more than 10% in the last few quarters. And I think that's encouraging. And our tourist arrivals are actually still increasing. I hope that they will continue to contribute to the domestic consumption, to the retail sales, and to the recovery of Hong Kong.
Are we at the peak for rates in this cycle?
Well, maybe near the peak. If you look at of course, for the Hong Kong interest rates, because we have the Hong Kong dollar peg, basically our rates will track the direction of the US rates. And if you look at the US rates, just like what Chairman Powell said last week, there's still some uncertainties in terms of where inflation will go. Yes, it's come down by quite a bit, but that last mile, how long will it take for inflation in the US to get back to the target range? And that will depend on, for example, how quickly service inflation will come down, and especially how quickly will wages, the wage growth come down. And wage growth tends to be a bit sticky usually. So I think it takes a bit of time to really monitor the data. I totally agree with what the Fed said in terms of really probably we're near the peak, but there could be more rates depending on where the inflation path is. But the talks about rates starting to come down will be a bit premature. I think the more the question that we should look at is how long the higher rates will stay in order that inflation in the US can be kept at the target range. And that's the base case that we are working on.
Residential mortgage loans in negative equity tripled quarter on quarter. Is the rising trend a cause for concern, and how soon do you expect this figure to start to decline?
Well, to us, I think the risk arising from that is very manageable, because if you look at negative equity, is a numerical outcome. Since the peak of the residential housing market in Hong Kong in 2021, we've seen a decrease in prices by about 17%. This year is kind of flat, down by 1-2%. So depending on where prices go, for those who take out a mortgage with the assistance of mortgage insurance, for those who take out mortgages with a loan-to-value ratio of 90%, if house prices decline more than 10%, technically and numerically they will be in negative equity. But mind you, even for those in negative equity, the default rate is extremely low. Currently, we're talking about 0.02%.